Did you know that the FAFSA doesn't include all of your assets? There's something called invisible assets that are actually not counted in the equation for the FAFSA. Well, the FAFSA is really the gateway to all financial aid. And the reason is because it gives you a number called your Student Aid Index, or SAI. Your SAI is basically what the government thinks you can afford to pay per year per student for college. Now, the SAI equation is made up of several factors: mom and dad's assets, mom and dad's income, students' assets and income, but not all assets are included. Now, if you're looking for a copy or an understanding of that SAI formula, I've done a video and I've linked it down below. Well, my name's Monica Felton, and since 2008, I've been coaching families to their American dreams. And for many families, helping their kids with college is part of that dream, but not at mom and dad's own expense. The good news is I've helped thousands of families with their best plan to save and pay for college and still protect mom and dad's retirement. So, what are invisible assets? Invisible assets are assets that are not included in the equation to determine a family's SAI, or Student Aid Index. Number one, retirement accounts are not included. Things like an IRA, a 401k, a 403b, a Roth IRA, a Roth 401k, a pension 457. Those are all retirement government savings plans, and those assets are excluded from the FAFSA equation. So if you have $500,000 inside of an IRA, that will not be counted. But if you have $500,000 in a savings account, a brokerage account, a 529 account, all of those assets are included in that FAFSA equation. Number two, home equity is excluded from the equation. Home equity is the value of your house minus any mortgage that you have. So if you have $500,000 of equity in your primary residence, it is not used in the equation to determine how much you can afford to pay for college. But if you have equity in a second home or in a rental property that you own as a small business, or if your small business actually has real estate with equity in it, all of those assets will be included in the FAFSA equation. Number three, cash value life insurance. If you have a life insurance policy that also has a cash value component that grows over time, compounding, this asset is excluded, and many families will use cash value life insurance as a diversification asset because cash value life insurance grows tax deferred. You can pull it out tax free. Obviously, there's a death benefit to protect your assets and income. And lastly, it's a great way to pay the cost of college. And again, it's an invisible asset for the FAFSA. And number four, lastly, are annuities. Whether it's a qualified annuity, meaning you've never paid taxes before, or a non-qualified annuity, both of those types of assets are excluded from the FAFSA equation, and all four of these are considered invisible assets. So you can see why college planning early, getting a jump on this early, is very important, because it's not only about how much money you've saved, it's about where you've saved your money. You can have two families with a net worth that's almost identical, and yet their financial award packages will be very different because of how they've structured their assets. So understanding what assets are excluded will absolutely reduce your overall cost of college. Now, I want all families to have the facts. So I offer a complimentary custom college planning report specific to your family. It will tell you what you're expected to pay, or that SAI number. It's going to tell you, are you financial aid eligible, and for what type of financial aid are you eligible for? This is about a 10-page report that is very robust and should be the starting point of every family's college financial planning journey. Early. I can't say that enough. You can get this report as early as you begin thinking about it. If you have a sixth grader, get the report. If you have a ninth grader, get the report. If you have a 12th grader, get the report. I guarantee you there's significant, valuable information that will reduce your out-of-pocket costs on that. You're also welcome to head over to my website at monicafelton.com, and you can learn many ways of how what your family's best plan is to save and pay for college while still protecting your retirement. Good luck to you.